Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking 10-year note futures. 10-year note finished down 9 ticks at 126 even. That translated into a yield of about 2.239. Now that may seem low, but yields did rise, and they came off of their lows of Tuesday of this week, which was 2.21. Now again, that also might not seem like much of a move, but it actually was a very significant move. That 2.21% was the low yield for post-election, post-US presidential election. And that's a big deal because yields fell quite a bit, down past 2.6% at that point. Now, that's backing off of that lows again, shows that we're back into a sort of critical area of 10-year note yields, and that's obviously going to put pressure on the futures because that's what they're priced off of. Now, Dallas Fed President Kaplan had an interview today, and he said that 3 rate hikes for the FOMC was still an appropriate baseline case, despite slower U.S. hard data that we've gotten in the first quarter. And we've gotten ramped up soft data. Consumer confidence, for example, hit a record high again when it was released. But the rest of the globe, the data is doing okay. And the U.S. data soft in the first quarter has been pretty typical since the recovery. Since the recovery began, the first quarter has been soft, and then the prior quarters definitely beat the first quarter. A lot of that, according to economists and analysts that I speak to, said that has to do with the consumers' lowered appetite for credit card debt. They spend over the holidays, they slow down in the first quarter, they pick up in quarters 2, 3, and 4. So Kaplan thinks that's still a good baseline case. That means that if the data stays slow, drops to 2, picks up, goes to 4. They've already done 1. The possibility of a rate hike in June has dropped below 50%, according to the CME Group's FedWatch tool. Now, lastly, we have Korea and France. Rates are unlikely to break down on the 10-year note with Korea and France looming. Now, France is the French elections. That happens on Sunday. The preliminary election happens on Sunday. You need for Macron to make it out of there to see tensions over this election calm. This is the more important election, believe it or not, than the runoff, because 1/3 of the populace is still undecided, and there's pretty much a 4-way race, with the top 3 contenders being Macron, who is centrist, Le Pen, who is right, and Mélenchon, who's backed by the communists, all above 19%. If it were to be that Le Pen, the right-wing candidate, and Mélenchon were to make it to the runoff, that would be 2 candidates with the possibility of a Frexit, meaning a French exit from the EU. So that would concern the markets. Korea today issued a warning to the U.S. that they're ready for a super almighty preemptive strike. I may not have the words right, but it was pretty dramatic. They said that that strike would take care of every soldier in the South Korean peninsula and leave the mainland of the U.S. in ashes. I don't think they really understand how big the U.S. mainland is, but it still is a ramping up of tensions. So until those tensions calm down and the French election goes the way the polls say, which we've seen that fail quite a bit lately, the 10-year note yield is likely to stay in this range. This is Bob Iaccino talking 10-year note futures from the CME Group trading floor in Chicago.